Okay, hello everyone, and welcome to this webinar brought to you by FXStreet.com. My name is James Chen. I'm the Chief Technical Strategist at FX Solutions, and today on this free access day, I will be giving my monthly webinar called My Daily Analysis, Finding High Probability Trading Setups. I'm going to be talking about and showing you live charts today on what I see going on in the currency markets. And I will show you this time on a bit shorter time frame charts, since I know a lot of you like to look at shorter time frames. So instead of the usual daily charts, I'm going to be looking more at the 4-hour charts and see what's going on there. So let's get started. And before we get started, briefly, I just wanted to show you a quick important notice that I need to show you regarding Forex trading. It involves substantial risk of loss and is not suitable for all investors. The information contained herein is solely for informational purposes and should not be construed as trading advice. Just going to give you a few more seconds to read through that, and then I'll go on with the rest of the presentation. Okay, now before I get into the background of how I trade, how I look at the markets, I'm going to quickly, as always, give you a brief overview of myself in case you are not familiar with who I am or what I do. I do these webinars once a month, and I think I see a lot of new faces here. So those who have heard this before, please bear with me. But and I will get to the current charts in a few minutes. So briefly about me, I am, again, my name is James Chen. I'm the Chief Technical Strategist at FX Solutions. I do primarily most of the technical strategy and analysis for FX Solutions. We're a global foreign exchange broker. I've traded actively as a private trader really since the inception of retail Forex, using primarily technical analysis and trend following principles, as well as key support and resistance levels, etc. I'm a chartered market technician, a CMT, which is the designation for technical analysts, both here in the U.S. as well as globally. I'm registered also as a commodity trading advisor, or a CTA, with the National Futures Association here in the U.S. I publish daily and intraday analysis, and you'll be able to see my chart of the day, which is published on fxsolutions.com, my company's website, as well as on fxstreet.com, among many others. I have a blog at fxpath.fxstreet.com. You can take a look at that. I have a lot of posts on, currency analysis, as well as some education pieces. Also, I've authored many articles in such publications as Forbes.com, Futures Magazine, Technical Analysis of Stocks and Commodities Magazine, SFO Magazine, etc. I'm quoted on a regular basis by Reuters News, Dow Jones, Associated Press, International Herald Tribune. And then the last couple things I wanted to tell you about, if you're not familiar with the fact that I'm the author of 2 books that came out last year and this year. The first was Essentials of Foreign Exchange Trading. It came out last year. It gives you the basics and the fundamentals and the technicals of trading the foreign exchange market. I also have another book that came out just a couple months ago called The Essentials of Technical Analysis for Financial Markets, which really concentrates on technical analysis for all the financial markets, whether it be Forex, equities, futures, or what have you. I also have a DVD set called High Probability Trend Following in the Forex Market. It's now available on fxstreet.com. It has been available since the beginning of the year. And it's a really good primer in the trend following techniques in trading the Forex market. And that's basically, one of my main principles when I approach trading in the currency markets. So that's briefly about me. Now let's get to the way I trade, the way I approach the market. I'm going to be talking briefly about how I look at trading the foreign exchange markets. A lot of you may have heard this before, but I'm going to try to go through it quickly and then show you my charts and see what we're looking at on the different currency pairs. Okay, the primary trading principles that I follow are what you see on the PowerPoint presentation in front of you. Number 1 is trend. I'm looking for trend. Now, when you talk about trend these days, from an overall longer-term basis, you look at the currency pairs, we're not really as strongly in trending mode as we were in many of these currency pairs just a couple weeks ago, a couple months ago. So you'll be able to see that. But when I talk about trend, I'm not only talking about the long-term daily trend, but I'm also looking at shorter-term trends as well. So when you talk about looking for trend, you're primarily, you're looking for directional moves, sustained directional moves in the market. But this does not have to only occur on the long-term time frames. It can also occur on the shorter-term time frames, which I'm going to show you in a few minutes. Also, very heavily, I rely upon support and resistance, and you can see this in any of my analysis. If you look at my chart of the day or any of my intraday analysis, you'll be able to see that I'm looking at key levels all the time. I'm looking at key levels, or more accurately, I'm looking at key price regions because it's hard to say that it's an exact science where price will turn or price will have some significant event at a specific price level. But when you talk about price regions, then it gets a lot more accurate and usable. Also, I work on consolidation retracements and breakouts, breakouts of consolidations, breakouts of retracements within any trending situation. And I'll show you that on my charts in a minute. Confluence is a coming together or confirmation of different factors supporting your trade. Multiple time frames. I have a strategy that I use often that uses multiple time frames, 3 different time frames to look at the market. You're able to see the market from 3 different perspectives. Although you're looking at price action, and price action is basically the same across time frames. Multiple time frame analysis will give you different angles on the same price action, which can be very, very helpful. I also make heavy use of price targeting. That's not to say that I wait for my price target to be hit before I get out of any given trade, but at the same time, it gives me structure to my trade to be able to target further support and resistance levels to the upside or downside, depending on if you're short or long the market. Locking in gains. I make heavy use of this as well in my trading. One aspect of locking in gains is placing your stop loss at break even once the trade goes in your favor. Also, manually trailed stops. I also use that as well to lock in any gains that I make on a trade. Risk management, very, very important. Risk management. When I talk about risk management, I'm talking primarily about stop losses and getting out of trades, cutting your losses when they're still manageable. So very, very important, and I'll talk about this in a second. Okay, trend is number 1. One of my main primary principles when trading any markets. Trend is taking the path of least resistance, and again, as I mentioned before, I'm not just talking about trading the overall monthly or weekly or daily trend. I'm talking about looking at any time frame that you're looking at, or if you're looking at a multiple time frame type of situation, you're looking at trends where sustained directional moves are occurring within any market that you're looking at. And I like to avoid trading against any strong trend, and wherever possible, trading with a strong trend. Now, one of my key principles, and I'll show you this with my charts in a minute, is I trade consolidation breakouts or retracement correction breakouts in the direction of the prevailing trend. What does that mean? Within any trending situation, you're always going to have consolidations, as we'll see right now, in a few minutes on British pound against US dollar. I just wrote about that this morning. We are in, on the 4-hour chart at least, we are in a consolidation within the context of a month-long uptrend channel on British pound against US dollar. So what I'm looking for, again, is consolidation or retracements, counter-trend retracements, counter-trend corrections, and breakouts of those, and preferably in the direction of the trend. Okay, so now support and resistance is my another key principle that I always talk about. I always use in any of my trading. I use support and resistance, both horizontal and dynamic, as entry zones. Okay, So when I talk about horizontal or static support and resistance and dynamic support and resistance, what am I talking about there? Static support and resistance, I'm talking about places or price levels or price regions where price turned in the past. Significant levels where price turned in the past. Also, you could talk about Fibonacci levels, key Fibonacci levels. Also, you could talk about pivot points, or any way you have to denote static support and resistance. Static just means that it's not moving. Dynamic support and resistance is as in trend lines or moving averages. Let's say you have an uptrend line. Okay, that's dynamic support and resistance. I'm sorry, that's dynamic support if you have an uptrend line. A downtrend line would be dynamic resistance, where the price level of the support or resistance changes as the trend moves on. Same thing with moving averages. That's also can be considered dynamic support and resistance. Oftentimes, for example, I will use the 20-period EMA or the 20-period SMA as support or resistance within strong trends, and oftentimes it works well in that capacity. So that's support and resistance. And then what do I do once I identify either static or dynamic support or resistance? I will look for bounces or breakouts in terms of my trade entries. Okay, so bounces off of trend lines, bounces off support, bounces down off resistance, or breakouts of these within the context of a trend. That's what I'm looking for. A lot of people ask me about this. I add entry filters whenever possible. Maybe a lot of people are not familiar with this term entry filters, but you probably use it even if you're not familiar with the term. All it means is that you're not going to get into a trade right when it hits support, for example, because at that point, right when it hits support, you don't know whether it's going to respect support or it's going to violate support. If it respects support, preferably you're going to be going long at support. If it violates support, preferably you're going to be looking to play the breakdown. Okay, but entry filters make it so you have a higher probability of getting into a trade where the momentum is in your favor. So, for example, if you're playing a breakdown of support, you're not getting in right when price touches support. Preferably, you're getting in a little bit after to see if the momentum is in your favor. And one example of an entry filter would be, for example, if you're playing a breakdown of support, then you're waiting for a close of the price bar below support, and then the next bar to move beyond that breakout candle or bar. Okay, if that makes sense. Other people may use entry filters where it moves beyond the point of break by a certain number of pips. That for me is a little bit arbitrary. So I like to use as my entry filter a break and close, beyond the point of the price level, and then the next candle to surpass the breakout bar. Okay. Again, as I mentioned before, horizontal support and resistance can either be prior market turns, whether they're minor or major market turns. Okay, that'll denote whether it's minor or major support or resistance. And then you can also use Fibonacci levels as well, pivot points. There are lots of different studies, drawing tools that you can use on your charts, including let's say the GAN studies, or besides Fibonacci, the Andrews pitchfork, many different ways that you could denote support and resistance. I tend to use very heavily prior market turns. Okay. What am I saying when I talk about consolidation retracement breakouts? Basically what I'm saying is I'm looking for, within any trending situation, I'm looking for breakouts of, consolidations where price moves in a range type of situation, where it's resting, let's say, or counter trend retracements or corrections. And I'm using breakouts of these as possible potential entry zones. Okay, and I'll show you that on my charts in a minute. Consolidation can be chart patterns like triangles, flags, pennants, rectangles, wedges. I make heavy use of these chart patterns. They could also be just counter trend moves within the trend, and I would trade breakouts of these moves in the direction of the trend. Confluence, I talk a lot about this. Confluence is simply I'm looking for areas where there's more than one technical factor providing rationale for a trade entry. And the more supports or the more rationale there is for a trade, I believe, in my opinion, the higher probability that trade will tend to be. And, this comes from a lot of experience looking at markets, staring at charts all day long, trading, lots of different markets. The more rationale you have for getting into a trade, the higher probability that you're looking at. This is not to say, however, that you should be paralyzed by your analysis or paralysis by analysis, where you have to have all of the stars lining up before you get into a trade. That's not what I'm talking about. But if you have several different rationale, at least, 2 different rationale for getting into a trade, that for me is a higher probability trade entry. Okay, and one example of Confluence is a bounce off of established support coinciding, let's say, for example, with a bounce off of a 38.2% Fibonacci level. Multiple time frames, I have a recording on fxstreet.com on my multiple time frame strategy that you can take a look at, and it's a pretty high probability strategy that I tend to use very often, but I don't think we have time to go into that at this time. So when we talk about price targeting, okay, so if you take a look at any of my analysis, you'll see that I always have a further price target. If price breaks out above this level, above this resistance level, within this uptrend, I'm looking for it to target this next level, which sort of acts as a magnet, but not necessarily. So I'm not going to be, closing out my trades, or I'm not going to be putting my, profit target for my trade at that level. I'm going to be locking in my gains as my trade goes along. But having a price target there gives you structure to your trade and also lets you, potentially set up your risk-reward ratio, so it's as good as you can get it. So that's one reason for putting in good price targeting. Okay, so for example, if I'm looking for a breakdown, breakdown entry for short trades, I'm looking for further established support levels to the downside for price targeting. And let's say I'm looking for, I'm entering on a breakout above resistance, then I'm looking for further price targets or further resistance to the upside for my price target. Okay, and then this is the main way that I look to close out my trades for profit, if indeed they go into profit. I'm looking to lock in gains. Now, there are 2 aspects of this. Number one is, once your trade goes into profit, hopefully it goes into profit, but once it does, at a certain point, you're going to want to move your stop loss to break even. And that's a great way to lock in, break even and, make sure that you're not exposing yourself to too much risk. Also, once it goes further in your profit, what I very often do is manually trail my stop losses, which is I move my stop loss to the next level so I can lock in whatever gains that I might have gotten. So, for example, one way to do that in an uptrending situation, let's say I play a breakout of a consolidation in an uptrend. Okay, so once that occurs, and once it goes into my profit, then at a certain point, let's say on the next dip, I will bring my my stop loss to break even. And then once it goes on further, and then let's say makes another dip within this uptrend, then I will move my stop loss to the bottom of the first dip. Okay, so that's one way you could do it, to manually trail your stop losses. And both of these practices serve to diminish stress and emotions when trading, and this is very, very important. You talk about psychology of trading, extremely important. It's not just about entries and exits. It's talking about, you need to have a trading plan, and your psychology needs to be in place, as well as your risk management, money management, etc. Okay, talking about risk management, I've written many articles on risk management and how technical analysis can be used to optimize your risk management. In this case, I'm talking about stop losses. So what I do and what I talk about over and over and over again is use technical levels, use technical analysis to set your stop losses, to set your risk management, and not arbitrary criteria like the amount of pips or the dollar amounts that you could afford to lose. Okay, a lot of people say I could afford to lose this amount of pips on this trade, so that's where I'm going to put my stop loss. That is the wrong way to do it. The best way to do it is to set your set your stop loss according to the technicals. For example, at the last dip in an uptrend. For example, right below resistance in a breakout situation. That's the best way, the most reasonable, logical way to do it, as opposed to saying, I can only afford to lose 20 pips on this trade, so I'm putting 20 pip stop loss on all my trades. And that's just arbitrary. Okay, so that, you do want to keep in mind your risk-reward ratio as well as your maximum allowable loss on each trade. And so for that consideration, we as Forex traders have it very good because we have flexible position sizes. So once you decide upon your stop loss level, then you could see how many pips that stop loss level is, and then you could set your position size to account for your maximum allowable loss and your risk management practices. Okay, so hopefully that made sense. So you manage risk constantly during the life cycle of a trade, not just at the beginning of the trade. And that just makes sense. So not only do you have an initial stop loss, but also you lock in your break even as well as you manually trail your stop losses. Okay, so finally, let's get over to the chart examples real quick. Okay, I'll tell you what I'm looking at right now on the, okay, let's just go through a couple of these questions first. John, read my book, very well put together. Thank you so much, John. I really appreciate that. Can you explain support and resistance on charts? I'm going to do that in a second, Ash. Michael, as a rough guide, how many pips profit would you allow before moving your stop loss to break even? Well, I wouldn't. I wouldn't, I wouldn't wait, as I mentioned before, I wouldn't wait a number of pips. I think that, number of pips is very, very arbitrary. I would look to price action, to where price action makes a technical, creates a technical event. For example, a dip in an uptrend before I move my stop loss to break even. And I wouldn't just say, I'm going to wait 20 pips and then move my stop loss to break even. That for me is an arbitrary way to do it. Okay, Michael. So hopefully that made sense. Chewbacca, how often do you get stopped out when you move your stop loss to break even? Yeah, that'll happen. That'll happen, occasionally, depending on the time frame you're using, depending on how you move your stop loss to break even. When you move your stop loss to break even, that does happen, but that's part of the game. And you're looking to, what I'm looking to do is, on the good trades, I'm looking to make a lot of money, a lot of profits on the good trades, and then, I will take my losses when I need to. And if I get stopped out at break even, then, that to me is not a loss. Can you compare the dynamic trend line to static trend line? Which one? This is from Fuji. Can you compare the dynamic trend line to static trend line? Which one tend to be more important to watch for? Okay. For me, dynamic trend lines are like what you see here. This downtrend line, these red lines here are dynamic trend lines. These are downtrend resistance lines. These yellow lines that you see here are static. Okay, for me, although trend is extremely important to me, static trend lines to me are more important in terms of support and resistance, because dynamic support and resistance, like these trend lines, will often have a lot of false breakouts and that kind of thing, whereas support and resistance in terms of static price levels for me are more reliable. And more people are looking, and you'll get more agreement on static price levels across traders than you will on trend lines, let's say, or on moving average support or resistance, because a lot of people are using different moving averages. They're looking at different support and resistance. They're drawing the trend lines differently. But in terms of static, a lot of people are looking at these price levels. So that for me is a little bit more important. Okay, there are a bunch of other questions, but I'll get to that in a second. Okay, so you're looking at a euro dollar, 240 minute or 4-hour chart. Now, as we can see here, this is what I'm looking at in the market right now. Let me show you the daily real quick. This is the daily chart I have, and let me refresh this so you can take a look. This is a daily chart of the euro dollar, and as you can see, very strong downtrend for a long time, and then boom, it hits below 120, and then it reverses into what I thought was a correction or retracement within the downtrend, and I was looking for that those shorting opportunities, which we got some shorting opportunities there. For example, here, this breakdown of this triangle, that was a good shorting opportunity, and then it did a steep retracement on the daily chart, and then it broke down there. That for me was a possibility for going short. It didn't work out too well because right after another retracement, and then back down. As you can see here, a breakdown of this little retracement here went to this support line, which was the bottom of the prior triangle. Okay, and then it just shot up and went above 125. And, we've stayed above 125 for the past week or so. Okay. So right now, are we still in a downtrend? Possibly. But, as I've said many times in many of my webinars, in the past several weeks, if it broke above 125 once again, then at that point I would have doubts as to, whether or not, this, downtrend was really as strong as, as it has been since December of 2009. So anyway, as you can see here, a little bit of a reversal pattern here. If you want to call this inverted head and shoulders, you can. I'm not telling you not to, but it's a very, very rough type of head and shoulders reversal pattern. Am I saying that euro's going to go all the way up? Not necessarily, but I'm looking for other key price levels. So let's take a look here at the euro dollar 4-hour chart. As we can see, once we broke out above 125, which was a key level for me, okay, we retraced back to 125, and then we, went back up from there, and we hit this resistance level here, which goes back here where there was a prior turn at around 126.70. Okay, so far we've done a little bit of a break to the upside above 126.70, and then we got a downtrend resistance line here. If we break out strongly above these two, I'm looking at possibly more on a shorter time frame basis. I'm looking possibly for more upside on euro dollar, and possibly I got a target up here at 131. Okay, that's a key upside target if in fact euro dollar has the upside momentum at this point. To go further up, I have 131 as a possible upside target. So, lots of weird things going on. Everyone, basically, most of the market, most of the analysts, lots and lots of traders were short euro. But, this whole thing that occurred in the past several weeks has been a little bit mind-boggling. But we are in sort of a consolidation here with some bullishness on euro. And if it does break through strongly, then again, I'm looking at 131. Now, very, very importantly, this is the British pound against the U.S. dollar. Okay, so if you take a look here, this is a month-long. This is a 4-hour chart. It's a month-long uptrend channel, parallel uptrend channel, pretty well formed, as you can see. This low down here was the June low in early June, and so this occurs within a month-long situation. So during this month-long situation where we had this parallel uptrend channel, we had many, many opportunities within this uptrend to play breakouts of these counter-trend retracements. So that, again, is one of my main trading principles, playing breakouts of counter-trend retracements or consolidations within the context of a trending situation. So we have a trending situation here, many opportunities here to play breakouts of counter-trend retracements. Now here, what do we have here most recently? We have a sideways ranging situation. We have a range anywhere from, and we just hit this, just today, we hit the sort of a triple top here, around 152.25 on cable, okay? That's a triple top situation here, and that formed the top of this sideways trading range, okay? And on the bottom here, we have around 150.80 is the bottom of the sideways trading range on the 4-hour chart. Now, what am I looking for? We saw some coming off this triple top we had several candles moving down. Now, truthfully, I'm looking for a break to the upside or downside. Preferably, within this trend that we have going on here, I'm looking for a break to the upside because we're still in an uptrending situation, at least on the 4-hour chart, a month-long uptrend. If there's a strong break to the upside, what am I looking for? I'm looking possibly for a profit target at 153.50. Why 153.50? Because there are prior turns, at least on the longer-term chart, at around 153.50. So I'm looking to initially target that 153.50 on an upside break above this consolidation. Okay, we still are within this uptrend. An upside break would look for 153.50. A downside break, if it breaks to the downside, then this uptrend line would serve as a dynamic support for me. Okay, but if it breaks down below the uptrend line, and if it breaks down below key support at 150, then we got a whole different story there, and a possibility for a continuation of the long-term downtrend in British pound against US dollar. So that's what I'm looking at. Upside resistance 152.25, downside 150.80. I'm looking for a breakout, and preferably to the upside. Okay, dollar yen. Dollar yen, very interesting stuff going on in dollar yen as well. Downtrend, strong downtrend. Until recently, we had many opportunities to get into this downtrend with counter trend. This here, if you take a look here, is it's a counter trend retracement. It's a small inverted flag. Okay, and this here is a small triangle, or you could call it a pennant if you want to, but I would more call it a triangle. So what happened was breakdown, within the context of this downtrend on the 4-hour chart on dollar yen, we had breakdowns of these chart patterns, and then what happened? We hit a double bottom at 87. 87 is very, very strong support. Let me see if I can show you on a. Okay, so if you look back in history, yes, the question was bear flag. Yes, yes, it was a bear flag. Now, if you take a look here, we got a double bottom here at 87, and if you look, recently, this is the daily chart again, another double bottom at 87, extremely strong support at 87. I was looking, if you looked at my analysis in the last couple of days or the last week, I was looking for a breakdown of 87. If it broke down below 87, that would have been extremely bearish for me. And then I was targeting further downside, possibly around 85. But it didn't do that. It made a double bottom low. Okay, so I'm sorry I keep turning on and off my charts, but I just want to make sure you see this. Okay, so again, we're back to the 4-hour chart on dollar yen. A double bottom low. Double bottoms, as a classic pattern, is usually referred to as a reversal pattern. Now, what happened? But we broke through 88 today, and 88 was sort of the around 88 was sort of the peak of the double bottom pattern. So a break above that. What happened was we broke above it. We retraced back to 88. This is a 4-hour chart again, and then we took off to the upside, and then a possible initial target at 89 on this break to the upside. Okay, so again, a classic double bottom pattern at strong support. Strong support at 87. Okay, now dollar Swiss. This is dollar Swiss 4-hour chart. What am I looking at here? Extremely strong downtrend. Still in a strong downtrend. What happened? Many opportunities to get in on the strong downtrend. Let's take a look quickly at the daily chart first. Okay, dollar Swiss daily chart. Look at this. Look at this pattern. The gains that were made from mid-April to the top in early June. I mean, this is a pretty symmetrical pattern here. So that steepness of that rise was matched by the steepness of the fall until now. Okay, so a lot of bearishness going on dollar Swiss. I read about dollar Swiss a lot because of this fact. Now, again, we're at the 4-hour chart on dollar Swiss. Strong, extremely strong downtrend here. You see these downtrend lines being respected very well. So what I was looking for, many opportunities for retracements and consolidations and breakdowns of support, as you can see here, breakdown of support, again, breakdown of support, and then we had an inverted or a bear pennant here, inverted pennant, break to the downside, retest of the pennant, and then a further break to the downside. We hit 105. 105 is extremely strong support, as you can see. Let me just show you here. I just scrolled back in time. As you can see here, extremely strong support at 105, okay? And we just hit 105 once again. What am I looking for? I'm looking for a breakdown of 105 with momentum, which I'm looking to target 103.50 on dollar Swiss, okay? Because this is, again, strong downtrend, breakdowns of corrections, breakdowns of retracements, breakdowns of support within a downtrend. It happened many times, and that's what I'm looking for at this point. A breakdown below 105, targeting 103.50. Okay, nothing much going on dollar Canada. There's a reason they call it loonie. Dollar Canada, for me at least, is hard to read. Okay, so this is Aussie dollar, 4-hour chart. Okay, lots of bullishness last several days. Okay, we hit a double bottom around 83, I guess, around 83, a double bottom, and then we had a sort of a false break above the double bottom peak to the upside, a retracement, but then it took off after that. Now, after it confirmed this double bottom break, or before it confirmed this double bottom break, you have this downtrend resistance line here, okay? And it broke very well above that. This is, again, this 4-hour chart of Aussie dollar. It broke very well above this downtrend resistance line, okay? And then it retraced, but then it took off, and then it broke out above this this other downtrend resistance line up here, okay? So, right now, at least for the time being, lots of bullishness on Aussie dollar. Okay, a couple of other things going on. Very interesting. Let me just turn to my charts real quick. Okay, Euro Pound. Strong downtrend. What happened today? Okay, we had a very quick and strong counter trend correction, counter downtrend correction, okay? Very strong downtrend on the daily chart. We see that today we just hit downtrend resistance line right here, okay? What happens from here? We'll soon see. Now, again, overall strong downtrend. Let me go to the 4-hour chart. Okay, what happens on the 4-hour chart? Also strong downtrend. Okay, but what happened just today? We hit again strong resistance at around 83.80. Okay, so as you can see here, if you could see this, we're at 83.80, strong resistance there, and if there's a bounce to the downside, then possibility for a continuation of the downtrend. I'm looking for a rebreak below 82. Okay, I know that's a little bit far away, but I'm looking for a rebreak below 82, and then, if there's a rebreak below 82, then possibility for further downside. But, we hit a very strong resistance level here. Okay. Let's see if there's anything else. Okay, last thing I wanted to show you, last chart. British pound against the Japanese yen. Again, a very strong downtrend, a parallel downtrend channel. What was I looking for? This is a daily chart. What was I looking for? I was looking for a breakdown below, as you can see here, many different breakdowns below counter trend support lines. See, counter trend support line, counter trend support line, counter trend support line. This could also be called a bearish flag or an inverted flag pattern, and then another counter trend move, and then a break to the downside. So I'm looking for all of these, and then just recently another break to the downside below a counter-trend uptrend support line, okay, within the context of the overall downtrend. But what I was looking for was after this broke down, and it broke down and hit 132, and at that point, 132 is strong support on British pound against Japanese yen. This again is the daily chart. I was looking for a clean breakdown below 132. If that clean breakdown occurred, then I was looking for a possibility to short. But that for me was very bearish. That breakdown below this uptrend support line. But a breakdown and close below 132 for me was extremely bearish. Okay, so let me just quickly go through some of these questions. Vita, what is the criteria you use to draw your support resistance lines? Again, my criteria for drawing support and resistance lines when you're talking static is prior market turns, mostly. And then I also use Fibonacci levels on occasion, as well as sometimes pivot points. Let me see. Okay, Jose, I'm looking for your questions here. Okay, Mapos, what do you consider confirmation of either reversal or continuation through support or resistance? I think you're asking about entry filters. How do I confirm that a breakout occurred? For me, a breakout most of the time would be confirmed that there is in fact momentum in the direction of the breakout would be confirmed with an entry filter. And really, that's one of the best ways to do it. You can never tell if if a breakout is really gonna follow through or it's gonna be a false or premature breakout. So, but you do the best you can. And for me, it shows momentum when there's a close beyond the breakout and then a move of the next bar beyond the higher low, depending on if you're going long or short, beyond the breakout bar. That for me is confirmation. Okay, if you have a static trend line on a daily, if you go intraday, do you move it? This is Jose. If you have a static trend line on a daily, if you go intraday, do you move it to where the closes are intraday, or do you leave it and trade the daily static trend line intraday? That really all depends, Jose. It depends on what time frame I'm trading, or if I'm trading on a multiple time frame basis. Usually, I'm looking mostly at my daily charts, but I will often, go down to 4-hour charts, 1-hour charts, 30-minute charts. But it really depends on, most of the time the trend lines will be approximately right. But in terms of the static support and resistance, which again to me is probably more important than the trend lines, usually they're around the same price region. Okay, and then I'll work off of those. Chap, what time frame do you use for actual entry? Again, I trade a lot on the daily charts, but I also will trade on 4-hour charts and 1-hour charts as well. So mostly, I'm looking at daily charts, but then also lower time frames as well. When I use specific strategies, for example, my multiple time frame trading strategy, I will look to much smaller time frames to enter. But on a daily trading basis, if I'm not using a specific strategy, I will, I will tend to rely upon the daily chart. Okay, I think I've run out of time here. It's been 45 minutes. I have a lot of other questions here. I'm sorry I couldn't get through all of them. But what I will do, again, as I always do, I will provide you with my email address here. So any additional questions, please feel free to contact me by email. I'm very accessible by email or by phone. If you're in the U.S. or anywhere and you want to give a call, then feel free to call FX Solutions and ask for me. I'd be more than happy to talk to you. Check out my chart of the day at FX Solutions as well as my blog at fxpath.fxstreet.com. You could take a look at my DVD set, High Probability Trend Following the Forex Market, and my books, Essentials of Foreign Exchange Trading, Essentials of Technical Analysis for Financial Markets. Again, I could be reached at jchen@fxsoul.com. Please do feel free to contact me if you have any questions. And, I thank everyone very, very much for taking out time today to listen to me talk, and I wish everyone good trading. Thank you very much, everyone.